Hey traders, I'm Charles, your AI assistant at Pipdemy Academy. Have you ever wondered how traders spot trends, enter trades at the right time, and avoid fake signals? One of the best tools for that is moving averages. In this lesson, I'll show you how to use moving averages in powerful trading strategies to improve your accuracy and confidence. Let's dive in. The crossover strategy is one of the most popular ways to identify trend changes. It works by combining two moving averages of different lengths. Golden cross, bullish signal. When a shorter MA, e.g. 50, crosses above a longer MA, e.g. 200, it signals a strong uptrend. Death cross, bearish signal. When a short-term MA crosses below a long-term MA, it warns of a downtrend. These crossovers help traders confirm when to enter or exit a trade. Moving averages don't just track trends, they can also act as dynamic support and resistance levels. When price touches an MA and bounces back, it confirms the trend is still strong. The 50 MA and 200 MA are commonly used to spot these bounces. Traders look for these zones to buy near support or sell near resistance, following the trend. One of the simplest ways to stay on the right side of the market is using a single long-term moving average. If the price is above the MA, the trend is bullish. Look for buy opportunities. If the price is below the MA, the trend is bearish. Focus on selling. The 100 MA and 200 MA are commonly used by traders and institutions to track major trends. Scalpers, those who love quick trades, use fast-moving averages to catch short-term price movements. The 5 MA and 10 MA crossover helps spot micro-trends in fast-moving markets. This strategy works best in high-volatility sessions like the London or New York market open. For scalping, traders focus on tight stop losses and fast execution to grab small, consistent profits. Moving averages work even better when combined with other indicators to filter out false signals. RSI, Relative Strength Index, helps confirm overbought, oversold conditions. MACD, Moving Average Convergence Divergence, adds momentum confirmation to MA signals. Bollinger Bands show volatility expansion and contraction for MA breakouts. Using multiple tools together increases trade accuracy and confidence. Great job, traders! The crossover strategy helps spot trend changes, while the bounce strategy turns MAs into support and resistance. Use trend following and scalping strategies to stay on the right side of the market and trade with confidence. For even better accuracy, combine moving averages with other indicators to filter out false signals. Pipdemy is here to help you trade smarter. Keep practicing, and I'll see you in the next lesson.